Alright, hi guys. So welcome to this Piranha Profits September 2017 trade review. So September's just over and we are now in October, so we have had a pretty decent trading month in September. So I'm going to go over all the trade alerts that I posted to our members. At the same time, the trades that were triggered, those were not triggered, the wins and the losses, right? So overall for this month, we had about 16 trade alerts that I sent out. Out of the 16 trade alerts, 9 trades were triggered. 7 were not triggered. And out of 9 that was triggered, we had 5 wins, 1 loss, and 3 that are still open, right? Trades that are still open, but looks like they are going to hit their profit target really soon. So let me just run through the trades right now. Alright, so let's take a quick look at our trade alerts for September. And you can see we've got 187 members right now receiving our trade alerts. So the first alert was on September the 6th, right? This was a sell stop limit order. So this was a short trade on CXW. So let's take a look at CXW. And so this was 6th of September and it was over here. So this was a bounce trade where, just give me a second to get my drawing tool up. Okay, there we go. So we have got this wave pattern going on over here. And we had a bearish pin. And we had a confirmation candle. So I was looking to short it going all the way down. Right? So we were going to place our sell order right below the low of this candle. Our sell stop order at, let me see, at 26.21. Right? So enter at 26.21. And what happened the next day was the price went up instead of going down. Oops, it went up. Oops. Okay, so it did not reach 26.21 the next day. It went up instead. So once my trade order is not triggered the next day, we cancel the order. So you can see it was then cancelled very soon. On the 7th of September, you can see that the trade was cancelled over here, all right, when it didn't trigger. So that was the first trade that was alerted and it was cancelled because the order did not trigger. Now the next trade was on the 7th of September. This was an impulse pullback setup called PRLB. So let's take a look at PRLB. I'm going to choose impulse pullback. Okay, so this was on the 7th of September, right? And it was an entry at 72.05, stop loss 70.65, target price 74.85. So this was a winning trade. Let's take a look at this. So 7th of September, let me scroll back. 7th of September. There we go. Okay. So this is known as an impulse pullback trade. We've got a short-term, short-term uptrend impulse over here. So we had a swing high, we had a pullback candle in the form of a bearish pin bar. So the buy order was a few cents above the high of this candle at 72.05. Stop loss was below the low of the candle, which was 70.65. 70.65. Target price was 74.85. So that was the target price, right? So the order was placed before the market opened on the 7th of September, right? We place orders before the market opens. The moment the market opened, you can see that on this day, the order was triggered. So we entered the trade, boom, boom, boom. And you can see that it hit the profit target within in 4 days we hit our profit target. So that was the first winning trade. We pull up the trade journal. You can see 7th September over here. We had the PRLB, entry over there. We hit our target price of 74.85. We exited on 12th September and we had a 2-hour win. right? 2-hour win over there. So recall in our trading, what is 1R? 1R is the distance from your entry price to your stop loss price. That's 1R. That's our risk per share. We always target at least a 2-hour profit target. So that was our profit target. So when we have a losing trade, it hit our stop loss, we'll lose 1R. If it hits our target price, we'll make 2R. So in this case, we had a 2R win. All right. So if you risk 1% of your capital, that's a 2% return. If you risk 3% of your capital, it's a 6% return. So it depends on how much risk you take when you size your positions. Right. So that was the first trade that got triggered and won. Okay. Now the next trade was, let me see, ORBC. All right. ORBC was also alerted on the same day, on the 7th of September. And let's take a look at that one, ORBC. There was also an impulse pullback trade. Yep. At 11:52, 7th of September. Let's take a look. Yep, so there we have it. We've got this short-term uptrend impulse with a pullback candle. Our entry was at 11:52, which was 11:52. Right, somewhere over there. I can't move it exactly, but was that. So the idea was to enter the trade if we had the candle going above the high of this candle the next day at 11:52. Now what happened was the next day, the price pulled back further and did not trigger a buy order. So again, this order was not triggered, and hence you can see the trade was cancelled on the 8th of September. Right? Once my order is not triggered on the day of alert, it's cancelled the next day. Right? We don't enter the trade. So that was ORBC. Didn't get into that one. The next trade was Esbra. This was a short as well, and again, this one did not get triggered, so we cancelled it the next day. All right, so that didn't get triggered. The next trade alert was 11 September NOC. Now this one we got triggered, and let's take a look at this trade. So this was a bounce trade, and this was NOC. So the date was 11 September, entry at 268.25. So let's take a closer look. 11th of September. Okay, so there we go. And this was a nice bounce trade, bouncing off the 50 moving average, right? So bounce off the 50, bounce off the 50, bouncing off the 50, right? So we had a bullish pin with a confirmation candle. So our order was to buy above the high of this candle, okay? Again, the entry was, let's take a look, entry was 268.35, right, which was somewhere around here, right, above the high of this candle. Stop loss was below the low of this bearish pin, about 264.22, and this would again be our 1R risk per share. So we always risk 1R, okay, and our profit target will be 2R, double the risk. Profit target at about 276.27. Was it that? Let me see, get the exact figure. 276.23. Yeah. So yeah, slightly lower than that, right? So what happened was the next day, on 11th of September, the price went above the high of this candle. It triggered our buy order. So we got in at on 11th of September. Boom, 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 boom. There we go. All right. Where were we? That's right. So we got triggered over here, right? And there's 1, 2, 3, 4. Now on this day, it almost hit our stop loss. Can you see that? It almost hit the stop loss. It went up, and hit our profit target, right? So it was like 1, 2, 3, 4, 5, 6, 7 days we hit our profit target. So that was the second winning trade of the month. Let's take a look. There we go, NOC, right? So we had an entry with our stop loss. We hit our target price on the 19th of September for another 2-hour win, okay? Okay, so that was the second trade that we had. 11th September, we also had an alert on CBM. So this was a Bollinger Mean Reversion trade. That means we are trading against the trend. It's a mean reversion CBM. Let me show you this trade. CBM. And this was a Bollinger Mean Reversion trade. Okay, so there you go. So mean reversion is when I go counter trend. So when I go counter trend, we're moving against the trend, so I tend to shift my stop loss a bit faster than usual. Okay, let's see where we are. Okay, so this was the trade, as you can see. We had price selling off till it was oversold. You can see the bullish pin bar cutting the lower Bollinger Bands. We've got divergence patterns on the stochastics and the MACD, right? So I place an order to buy above the high of this candle, right? So that's my entry price. Above the high, the next day, if it goes up, it gets triggered. My stop loss is below the low. So you can see entry 50.25, stop loss 48.65. And my target price is 53.45. So once again, that's my 1R. That's my risk per trade. That's my 2R profit target. So my profit target was at 53.46. Let's see what happened to this trade. So there you go. So the next day, the price went up to our high, got triggered 1, 2, 3, 4, 5. 5 days later, it hit our profit target of 53.46. So that was our third winning trade of the month. Let's take a look at our journal. So there we go. 11th September CBM, entry, target price. We hit our target price, we exited for another 2-hour win. So 3 wins in a row, pretty good. Now the next trade was a disappointment, okay? Because it should have been a winning trade, but it did not get triggered because I placed my limit order too close. So this was a lesson I learned, that when I trade the range, I have to give more room for my limit order, right? So this was PCBK. I want to show this to you because, you know, I make mistakes as well, right? And this was a big mistake because it cost me a winning trade, right? Instead of winning, I did not get triggered. I did not get into the trade. So this was PCBK trade the range. So this was a trade the range setup. All right, as you can see, this was clearly in a very nice range, right? 1, 2, so on and so forth. Very nice range. And over here, when it went down, I wanted to take a buy order. Okay, so let me show you the buy order. The buy order was over here with my stop loss somewhere over there. Okay, so let me just zoom in and show you what happened. Okay, so as you can see, my entry was 23.50, which was there. My stop loss was 22.80, which was below the low. And my target price was 26.05, which was there. And I placed a limit price of 23.55, which means that I will not get filled. The price moves above 23.55. And I was a bit too conservative because what happened was I placed the order before the market opened. Let me just scroll back. Okay, so what happened was after I had a bearish candle that touched the support level, and I had a first bullish candle, I said, okay, I'm going to go into this trade. So I placed my buy order above the high of this bullish candle, again 23.50, with a limit of 23.55 and a stop loss of 22.80, target price 26.05. So what happened the next day was the price shot up too fast. So because it shot up too fast, it went above 23.55 before I could get filled. So I did not get filled on this order. And the next day, boom, it went up. And you may say, hey, Adam, why don't you buy it the next day? Well, the moment I don't get filled and the price moves up, I don't chase it. It's kind of like, if the bride runs away, don't chase after the bride, right? And it was a pity because the price went all the way up and it hit the target price within a week. So that could have been another 2-hour win, but my limit order was too close, so I did not get filled. So the lesson learned is that I'll place my limit order slightly further, so if the price goes up too fast, I will get filled. So this was a wasted trade, PCBK. Well, it happens in trading, so gotta move on, right? There we go. So 13 September, PCBK not triggered, price went up above limit price. All right, fine, no worries. What date was this? Let me see. 13 September, I had another trade alert which I entered, and this was STLD. Okay, this was not STLD. Trade the range. Let me show you the chart again. STLD. So this was another very nice rangy kind of stop, right, in a very nice range. Okay. All right, so STLD, entry price 33.35, stop loss 32.05, and target price 37.28. So as you can see over here, all right, again, the entry price was placed above the high of this candle, 33.35, stop loss below the low, 32.05, and the target price 37.28. So once again, we had a good 1 hour risk per share, and this was something like about 3 hour to the profit target, right? So it's risk 1 to 3, great trade, profit target 37.28, entry price, stop loss price. So what happened was this trade, we got triggered the next day. As you can see, price went above the high, got triggered, and as you can see, it went down, almost hitting the stop loss, but went up again, and right now we are 1 hour in the money. Okay, 1 hour in the money. So once the price moves by 1 hour, I shift my stop loss to the entry price. So I've got a risk-free trade, and I'm waiting for it to hit the profit target. So as you can see over here, I've got STLD, and it's an open trade. It's not closed yet, but it has no more risk. I've shifted my stop loss to entry price. Okay, so that's STLD. Moving on. This was another trade, DKL. As you can see, the order was not filled, so I canceled the order the next day as well. So I'm going to skip that. For CBM, well, we entered the trade earlier, as you saw, and basically the price went up 1 hour above my entry price, so I shifted the stop loss to the entry price, and it hit the profit target. So that was the alert to shift the stop loss up. The next trade alert was 15 September, IRDM. Okay, so this was another trade the range setup. Let's take a look, IRDM. Okay, so again, another very nice range setup over here. So this was the 15th of September, entry at 10.05. So 10.05 was somewhere over there. The stop loss was at 960, below the low, the lowest low of the range. Right, I can't get to 960, but it's 960 below the range, and my profit target's 1140, somewhere there. So again, this is a great trade because my risk is 1R, and if it hits my profit target, it's about a 3R potential profit. So it's your risk to return is 1:3, and I love those trades because it gives me the greatest profit potential. So again, this trade was placed on the 15th of September. Let's scroll back. That's right. Okay, and you can see that it got triggered on that day itself. On the 15th of September, it got triggered on that same day, and we're in the trade, went up, and right now we are here. So it has moved more than 1R from my entry price. So I've shifted the stop loss to entry price. I've got a break-even trade, and I'm very close to hitting my profit target. So over here you can see IRDM, right? It's an open trade, but very close to hitting the next profit target. Okay. Okay, the next trade was OKSB, and that was my only losing trade of the month. Okay. Now, I shouldn't have taken the trade, but I did, so well, that's that. Reason I say I shouldn't have taken the trade is because usually I only take short setups when the index, the S&P 500, is on a downtrend. But the S&P 500 was an uptrend, and I still took this short trade because I thought, hey, I've got so many longs, I thought I'll take a short to hedge the longs. But, well, it turned out to be my only loser. So, lesson learned, I should take only trades that follow the S&P as much as possible and not act smart and try to outsmart the market. So that's what happens when you attempt to outsmart the market, you get your loss. All right, so OKSB, this was again 15th of September. Let me show you the trade. This was a short trade. So 15th of September. Okay, so as you can see, it was in a clear range, like so. It's a range. There we go, right? So I thought, hey, right, resistance, 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 right? It's going to come all the way down. So I thought, let me go short this, right? But again, the S&P was bullish, right? And you should always avoid shorting when the S&P is bullish because you're going against the whole market. And well, I did that and paid for it. Okay, so my entry was at 26, which was entry was at 26 here. Okay, place my sell order below the low of the bearish candle. My stop loss was at 26.65, which was above the high of the range, and my profit target was 24.45, hoping it will come back to the support. Now, what happened after I entered the trade? You can see the next day, my trade got triggered when the price went down, and 3 days later, it hit my stop loss, right? Went above the high. So as you can see, that was my loss, minus 1R, okay? So moving on, the next was 18th of September, RDUS. This was a Bollinger Mean Reversion trade, entry 33.80. Let's take a look at that one. So RDUS, Bollinger Mean Reversion. So again, for this one, I'm trading the range, or rather, I'm trading against the trend because it's taking a mean reversion trade. All right, so there we go. So again, this was on the 16th of September where the order was placed. All right. So you can see a downtrend is oversold. I've got a bullish pin. I've got a bullish pin cutting the lower Bollinger Bands. I've got divergence on MACD and stochastics, right? So I place my buy order above the high of this bullish pin candle at 33.81. Or rather 33.80, sorry. Yeah, so the entry was at 33.80. Well, I can't get it exactly there, but it's there, 33.80. Damn, this software sometimes gets me. Okay, 33.80 anyway. Stop loss below the low of that candle, which is 31.76, right? And my profit target, 37.88. So again, my risk is 1R. My profit target is 2R. Okay, so order was placed before the market opened on the 16th of September. What happened? So when the market opened, you can see it went up, triggered my buy order. Okay, and it looked like it was coming down. I said, oh shit, it's coming down. But I held on to it, and sure enough, boom. 1, 2, 3, 4, 5, 6, 7, 8 days later, it hit the profit target and giving me my next win of the month. So that was RDUS to our profit again. Okay. All right, so next was ALK. Let's take a look at ALK. All right, sorry, the next alert was CMG. So that was on the 20th of September. That was also a Bollinger Mean Reversion trade. So let's take a look at that one. Okay, so again, what's the date? 20th of September, right? So the order was placed on the 20th of September. Scrolling back. Okay, there we go. So again, this was another Bollinger Mean Reversion where price was oversold on a downtrend. We had a bullish pin bar cutting the lower Bollinger Bands. We had divergence on the stochastics and the MACD. So the buy order was 304.87, just above the high of the bullish pin candle, 304.87, thereabouts. Stop loss was the low of the bullish pin, 295.01. Again, thereabouts. And profit target was 324.59. 324.59, somewhere about there. Okay, so again, this was a nice 1R risk to 2R profit. Okay, so the next day you can see the price opened here, went up, triggered the buy order, and got filled at, if I'm not wrong, yeah, filled the limit price of 304.97. Okay, so let me fill in the order. I forgot to fill it into this particular one. So again, this was 20th of September. So there was a long trade. That was CMG. This was a BMR trade. Uh, 304.97 was the entry. Uh, 295.01. That was the stop loss, and profit target was 324.59. 324.89, sorry. Yeah, sorry, 324.59. That's right. All right, so that order was on the 20th of September. And let's see. So on the 22nd of September, we had ALK. There was another Bollinger Mean Reversion trade. Let me just show it to you really quickly. ALK. And again, you can see, oops. So there we go, price on a downtrend oversold. We had a bullish pin bar cutting the lower Bollinger Bands, divergence on MACD. So the buy order was placed above the high of the bullish pin candle, stop loss below the low of the bullish pin candle, target price 2 hour away. The next day we got triggered. So this was a triggered trade. And what happened was it went up and it started to find resistance at the 20 EMA, as you can see, found resistance over there. So I was cautious because I'm trading against the trend. So I decided to shift my stop loss to 74.76. Right, so my stop loss was shifted to 74.76, which was just below the low of this bearish candle finding resistance at 20 EMA. And the next day, what happened? The price went down and I got stopped out. So I got stopped out with just a small profit at 74.68. So instead of getting 2R, I got 0.5R. That was a bit of a disappointment because after I got stopped out, guess what? The price went all the way up to my profit target. But you know, it's something you never know. So you never regret once you make a trading decision. Unless it was against the rules, it was with the rules, so no worries about that. Okay. The next trade was IYR. This was 29th of September. Let's take a quick look. All right, so taking a look on the 29th of September, all right. By the way, you can see over here on the 28th of September, I sent a note that said there's no compelling trades to enter today again. As a successful trader, patience is needed to wait for the ideal trade to present itself. In trading, not doing something is doing something. And that's one of the most important things as a professional trader. You don't have to trade every single day. If there are no good trades to take, don't trade. You know, I always say that every day there are 3 things you can do. You can buy, you can sell, or you can go fishing and do nothing, right? So you can see that only when I've got really good trades with a very high probability do I take these trades. I do not go for quantity, I go for quality. So there were a few days on the 27th, 28th September, there were no trades, and I said, you know, there are no trades, don't trade, don't do anything, right? On the 29th of September, there was a trade alert on EGP, but that didn't get triggered. So you can see, in fact, on the 1st of October, the trade was cancelled because it was not triggered, right? So the next trade that was triggered was IYR, another range trade. Entry at 79.91, stop loss at 78.92 with a target price of 82.36. So let me show you that trade I took. And so that's IYR. It's an ETF. And you can see it's in a very nice channel range. Right? You can see resistance, 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 support, 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 and it just bounced off support. So this was triggered on the 29th of September. So right, my alert went out just before the market opens. My alert will go out to my members about 5 hours before the market opens, so they can place their order before the market opens. When the market opens and it goes to the intended entry price, it will get triggered, or it won't get triggered, right? If it doesn't get triggered, we cancel it the next day. So again, I saw that the price had gone to the support, and now you can see from this red candle, it has turned into a very strong bullish engulfing candle. So I say, hey, it's probably going to go up. So I placed a buy order, as you can see, a few cents above the high of that bullish candle at 79.91. That's my entry price. Stop loss was at 78.92, just below the low of this candle. And so that is 1R risk per share. And again, my profit target is 82.36, which is, if I'm not wrong, about 2.5R above the entry price. So it's 1 to 2.5. Again, above 2, that's a good trade to take. All right. So when the trade was entered, the market opened, it triggered the buy order. All right. When the market opened, and currently we are here. So we are right now below the entry. I've got a slight loss right now, unrealized loss. Again, you could hit the profit target, you could hit stop loss. Anything can happen in trading, right? So every trade is random. I never know which one's going to be a winner, which one's going to be a loser. But I know if I keep taking high quality trades, when they present themselves, I will always have more wins than losses. And my average wins will be more than my average loss, and that's how I make a profit as a professional trader. All right. So that's September. So far, clocked about 7.5 R for the month out of 6 trades. Okay, so I've got about 3 trades which are still open, they're not closed yet, so as of now it's about 7.5 R. So what does that mean again, right? So on average, if you get a 7 R a month, okay, and if you're risking say 2% per trade, so that is equivalent to a 14% return on your capital, right? So if you get 14% return a month on your capital and you compound that over a year, that's more than doubling your money, right? A lot more than that. So you can do that if you trade consistently with the right strategies. So that's what I teach at piranhaprofits.com. You can also subscribe to my trade alerts, but it's not available within Asia. In Asia, I conduct my live courses. You can come to my live workshops. Outside Asia, you can take our online professional trading course in stocks as well as Forex. It'll be coming out in about a month's time, right? So that is Adam Khoo signing off. I'll see you next in October, right? For now, this is the September trade alerts. Alright, so if you like the video, do subscribe to our channel for more videos, and do check out wealthacademy.global.com for our live courses in Asia, or piranhaprofits.com for our online professional stock and forex courses. Adam Khoo here, signing off. I'll see you soon.